research advisor at the San Francisco Fed in 2008. That must have been fun. And then vice president of microeconomic and macroeconomic research in 2013. He has a bachelor's degree and a master's in economics from McGill and a PhD, also in economics, from the University of Rochester. Mr. Leduc has served as the editorial advisor for the Canadian Journal of Economics. His address will be slightly different. He's going to speak to you for 20 minutes, and then he's agreed to open the floor to questions. So this is your chance to directly question the Deputy Governor of the Bank of Canada with what you want to know. You can note the mics in the aisles. If you go to them when he's ready, he will take your questions. Please welcome to the stage Sylvain Leduc.
All right, thank you, Amanda, for the kind introduction. It's really a delight to be here at this conference and to participate. Bonjour à tous, ça me fait vraiment plaisir d'être ici parmi vous. Et je remercie aussi Paiements Canada pour l'invitation de présenter ici à cette conférence d'envergure. So, let me start with a brief story. On the morning of November 21st, 1985, officials at the Federal Reserve Bank of New York received a routine phone call from a large bank that they supervise. The call informed them that they were still preparing their settlement accounts from the day before and would not be in position to process new transactions until later that morning. You know, stuff happened. So the New York Fed officials were not too concerned because delays like this occur occasionally. But it was only later in that day that they realized the gravity of the situations, that financial institutions in questions was $30 billion in the red. So that's US dollars, and that's billion with a B. And this extraordinary situation was caused by a computer glitch the day before that had impaired that bank's internal payments processes. And the glitch meant that it was unable to receive payments for securities that it had bought on behalf of its clients. So by the end of the day, signs of liquidity pressures on the wider interbank market were developing, and the Fed had to step in and lend that bank $23.6 billion through its discount window. And at the time, this was by far the largest loan of this kind. And the loan was necessary to avoid the potential failure of one of the largest banks in the United States at the time. And its likely failure would have spread stress throughout the whole financial system. So now, of course, there are significant differences between internal systems of any given banks and the whole payments infrastructure that supports the financial system as a whole. But I'm recounting this story because I think it really highlights very clearly the link between payment system and financial stability, a topic I want to touch on today. And this is a timely subject since, as all of you know, our payment systems are showing their age. While they're constantly being upgraded and still function, technology is changing rapidly and improving, offering better and smoother ways to move funds. And we've got to keep pace. And the good news is that our conference host, Paiements Canada, which operates our core large value and retail payment system, is making steady progress on a modernization plan. And so the goal is to develop a payment system that is fast, flexible, and secure. And we want it to be fully integrated and aligned with global regulatory standards and become a platform for future innovations. And this modernized system will certainly lead to gains in efficiency. And it will also, and this is of the utmost importance for us at the Bank of Canada, strengthen the stability of the financial system. While problems such as the one I just described are rare indeed and have never occurred here in Canada, we still need to be vigilant and keep improving our systems. Now, because the bank is responsible for promoting the efficiency and stability of the financial system, which, by the way, includes oversight of core payment systems, we're working closely with Paiements Canada on the modernization plan. And our staff of experts are involved in providing inputs at all levels. And I have confidence that with the collaboration of the bank, industry participants, and other stakeholders, that the modernization program will help strengthen the stability and efficiency of our financial system. So today I want to focus on the payoffs from payments modernization for financial stability. So this is a benefit that, to my mind, is often overlooked because we tend to concentrate on efficiency, how fast we can move payments. So what I want to do is set the stage first by discussing the main risks that participants face in payment system. And against this background, I'll focus on designs for payment systems that address those risks, as well as the demand for greater payments efficiency. Given we're from the bank, I want to circle back and discuss why this is important for the bank's conduct of monetary policy. Okay, so that's the goal. All right, so let me start by first taking you back again to 1985, the year that computer glitch occurred. So as a fan of the Montreal Canadiens, that year is memorable to me because the Habs were midway through their 23rd Stanley Cup win. Yeah, 23rd. With a rookie named Patrick Roy in front of the net. So I know I'm in Maple Leaf territory here, but I'm sure there are some Habs fans here too. And I think, I think tonight we all have to be Ottawa Senators fans, because I think it would be great to have a Canadian team representing us in the Stanley Cup, giving the importance of this year for the country. So in 1985, Paiements Canada's retail payment system, the ACSS, the Automated Clearing Settlement System, was also in its rookie year. Okay, and it's 33 years old, and I kid you not, that's Patrick Roy's number. So the system still processes some 30 million retail transactions a day. Payments clear in ACSS are then settled on a multilateral net basis the next day in our large value transfer system, or very cleverly named LVTS. So despite its age, the ACSS is still performing reliably, but so was Patrick Roy, but he retired in 2003. The LVTS, which was introduced in 1999, is also showing its age. It's the core of Canada's national payment system. Transaction in the LVTS ultimately settles on the book of the Bank of Canada at the end of the day. And one of the great things that Paiements Canada did is change the name, and now it's going to be called Links for agility, and I think it's a great innovation. So modernizing our core payments infrastructure, needless to say, is long overdue. Paiements Canada has set out a roadmap for modernization that includes changes to both LVTS and ACSS, as well as the introduction of a real-time retail payments. Now, needless to say, this is an ambitious goal, but Paiements Canada has developed a credible staffing plan to achieve it. It has also hired the services of a well-established consulting firm with expertise in payments to help manage the complexity of this process. And we all expect it'll take several years to complete it. And this is a costly project that will affect industry participants as well as the Bank of Canada, because we are a direct participant in LVTS. But these changes will bring our payment system in line with state-of-the-art system introduced abroad. Indeed, recent research by Paiements Canada, as well as the bank, documented that 19 countries have made major changes to their core payment system since 2004. And these countries face the same challenges we're now facing, right? So for one, adopting new technologies can be daunting. Given the rapid pace of technological change, designing with an eye towards the future is critical. Modern systems must be flexible, adaptable. For example, newer systems are modular in nature, meaning that specific functions are built into separate modules, so therefore helping adaptability and flexibility. As I mentioned, both of our core payment systems have been upgraded several times since their respective launches. But their legacy architecture often makes it difficult to introduce new features that would facilitate a more modern approach to risk management. So I'll give you an example. All these systems are written in COBOL, an old sort of inflexible programming language that is no longer in use instead of in these legacy systems. So maintaining or changing these systems using COBOL is pretty challenging. Just recruiting people that know this language is challenging. And this risk management approach is important because payment systems are exposed to various types of risk. And let me go through in a little bit more details here. For instance, a payment may fail to settle because an institution is unable to fully meet its financial obligations when the payment is due or at any time in the future, therefore introducing credit risks. And as we saw in the example of the bank with the computer glitch, operational risk can also introduce gridlock in payment system. Payments are also associated with liquidity risks, which arises because an institution may find itself temporarily short of funds to make a payment at the time needed. But more broadly, and maybe more importantly, because participants in certain payment systems are highly interconnected, systemic risk can arise when the inability of one institution to settle a payment produces a kind of domino effect, or what we call financial contagion, triggering a similar inability at other institutions. And this is one of the key points I want to underline here today, so let me repeat it in French. Il est grand temps de moderniser l'infrastructure de base du système national de paiement. Les systèmes de paiement sont exposés à divers types de risques. Par exemple, le règlement d'un paiement pourrait échouer si une institution est incapable d'assumer l'intégralité de ses obligations financières au moment où le paiement est exigible ou à tout autre moment dans l'avenir, ce qui constituerait un risque de crédit. En raison de l'interconnexion entre les participants à certains systèmes de paiement, un risque systémique peut survenir lorsque l'incapacité d'une institution à régler un paiement produit une réaction en chaîne en provoquant la même incapacité chez d'autres institutions. La modernisation est un projet coûteux, mais elle permettra à nos systèmes de paiement de soutenir la comparaison avec les systèmes de pointe mis en place ailleurs dans le monde. Okay, let me switch back to English. So, systemic risk, financial contagion. Now, financial contagion is intimately related to the concepts of market failures and externalities that are present in certain payment systems. A bank that defaults or experiences a technical failure will not bear the cost of these events on its own. Other financial institutions will also be affected. Such externalities can lead to decisions that are suboptimal from a social perspective. If left to the private market alone, both theory and experience show that the resources devoted to the safety of payments systems may be less than is socially warranted. And this raises the possibility of operational liquidity and credit risks. And to guard against this possibility, central banks are typically mandated either with operating or overseeing their country's main payment systems. And an important aspect of designing payment systems is developing infrastructure that can appropriately address these sorts of credit, liquidity, systemic, and operational risks. And in addition, because of their systemic importance, high-value payment systems like our LVTS must be designed to ensure their safety and reliance. So, now that I've alarmed some of you by enumerating all the risks that are present in payment system, let me reassure you that the Bank of Canada has in place strict risk standards that Canada's core payment system must meet. In addition, payment systems have evolved through the years to mitigate these risks a little bit on their own. In high-value payment systems, this evolution reflects the fact that increasingly large sums are transacted every day. So take our LVTS, for example. $175 billion are processed daily, so clearly a large sum. So one of the big concerns for central bank is the potential for payment system to put financial stability at risk through the exposures that participants might have to each other. So in response, many central banks have adopted real-time gross settlement or RTGS systems. And these systems eliminate credit risk between participants by requiring the final and irrevocable settlement of each payment. Now we have other systems. So if we contrast them, deferred net settlement system, or DNS, are typically designed so that payments are settled periodically on a net basis, usually at the end of each day. In this case, credit risk still arises in these systems because an institution may fail between the time a payment is made and the time the payment is settled. As a result, in most jurisdictions, the main large value payment system operates as an RTGS, although many retail systems and even other secondary wholesale payment systems may operate on a DNS basis, as in the United States, for example. Research conducted at the New York Fed a few years ago shows that while only 3 countries had RTGS system back in 1985, 20 years later, that number had increased to 90. So from 3 to 90, a big jump. However, as is typical in economics, there are trade-offs, and in this case, between credit and liquidity risks. Because each payment must be settled on a gross basis, RTGS systems are costly in terms of liquidity. An institution needs to have the necessary funds on hand or must be able to borrow them before it can make a payment. If the cost of liquidity is high, financial institutions have an incentive to delay making payments, waiting until they, in turn, receive payments from other institutions, so introducing this type of gridlocks. While credit risk is higher in DNS system, the liquidity requirements are lower since payments are settled on a net basis instead of a gross basis. Over time, however, hybrid systems that combine the best of the RTGS and DNS systems have emerged to achieve a better trade-off between credit and liquidity risks. Our LVTS system has a unique hybrid framework. As in DNS system, payments are settled on a net basis at the end of each day, thus economizing on liquidity needs. But the system also shares features with an RTGS framework, since payments are final and irrevocable. The finality of payment is achieved through a pool of collateral from participants, institutions that cover the single largest possible default. And then a residual guarantee from the Bank of Canada fully protects against any remaining credit exposure. So you can think of the bank's guarantee as a form of disaster insurance, since the probability that more than one of our large financial institutions may fail on a given day is, of course, extremely remote. This design has the benefit of providing payment finality in a collateral-efficient manner, although at the cost of the public bearing a contingent liability. While this approach was appropriate at the time the LVTS was created, international experience has shown that other hybrid systems can also provide efficiencies and finality without the need of a public sector backstop. So we envisage that the new high-value payment system that will be deployed as part of the modernization plan will be a fully collateralized default-or-pay system. While we're ready to consider different designs consistent with this vision, an RTGS system with liquidity savings mechanism may provide a relatively simpler and well-tested framework. Okay, so I talked a lot about financial stability. What about efficiency? Naturally, end users of payment systems care not only about the resilience and security of the system, but also about its efficiency. The desire for greater efficiency is particularly acute for retail payments. Customers are more demanding than in the past. They're looking for more convenient and cheaper access to financial services that are well integrated with the rest of their online activities. We've seen an explosion of innovations that are making it easier and faster for parties to exchange payments, both at point of sale and online. You can think of PayPal, Interac, e-transfer, and Apple Pay are just three examples. To be in tune with these innovations and with consumers' expectations, a modernized retail payment system will need to allow more open but risk-based access that will promote innovation and improve end-user experience. Designing an efficient retail payment system that fulfills these needs and expectations is essential because the volume of transaction flowing through it is so large. And that puts a premium, of course, on efficiency. However, since the values of the transactions are relatively small, the risk that a failure in any one participant will trigger then financial contagion is more remote than for a large value payment system. But even so, disruption in retail payment system can still bring about important losses to the economy. And to address this risk, the ACSS was recently designated a prominent system and is now overseen by the Bank of Canada. But failure to keep pace with user expectation may lead to the adoption of potentially unregulated forms of payment that could end up posing risks to the economy as they grow over time. Now, let's circle back to monetary policy. What does this all mean for our conduct of monetary policy? Because of its impact on financial stability, the soundness of our payment system is also crucial for the conduct of monetary policy. Our key policy objective at the Bank of Canada is to keep inflation low, stable, and predictable so that Canadians can make better economic decisions and achieve better economic outcomes. As the global financial crisis showed, financial stability is clearly needed to achieve this mandate. This presupposes a well-functioning payment system. Our monetary policy decisions are also partly transmitted through the economy via long-term interest rates, exchange rates, and other asset prices. So the conduct of monetary policy depends on a well-functioning financial market. And disruption in payment system could ripple through the financial market at large and thus impair the transmission of our monetary policy. And third, in Canada, there's an even more direct link and more explicit one between the operation of the LVTS and the implementation of monetary policy. So some of you may remember your first money and banking course, where the central bank changed interest rates by buying or selling government securities for money. And some of you maybe have nightmares right now just thinking about it. Doing so affected the money supply and interest rates. But in practice, that's not exactly how we implement monetary policy. Since the launch of LVTS, we have been implementing monetary policy by managing the interest rates on accounts used to settle payments at the end of the day in our high-value payment system. So to reinforce the target for the overnight interest rate, which is our main policy instrument, we use an operating band. The deposit rate is at the bottom of the bank, and the bank rate, that is the lending rate, is at the top. So we have a band with these two rates at the bottom and the top. In a nutshell, banks that have excess funds after all payments have been settled earn the deposit rate on those funds, okay, which is typically 25 basis points lower than the target for the overnight rate. And meanwhile, banks that are short of funds to settle their accounts can borrow from the Bank of Canada at the bank rate, so the rate at the top of the band, which is typically 25 basis points higher than our target rate. And the spread between the deposit and the bank rates gives commercial banks an incentive to trade with each other at an interest rate within the band. It falls typically in the middle of the band at our target rate. So the changes that we envision to the high-value payment system will not affect our ability to implement monetary policy. We will continue to do so through the system using the target rate, and the operating band. We do not expect the changes to the high-value payment system to alter our ability to control the overnight rate, which should closely track our target policy rate, which is the case today. Now, given the implications for financial stability and monetary policy, we take a comprehensive view of payment systems. And this means that we look not only at modernization in the near term, but also in the longer term as well. So keeping up with the latest technological advances, such as distributed ledger technology, or DLT, is imperative. While we're a long way from adopting DLT, we still want to be forward-looking enough and study its possible impact. So now that's the commercial part of the talk. So later today, you'll be hearing about an experiment called Project Jasper that we've embarked on with Paiements Canada and a number of Canadian financial institutions. To investigate the cost and benefit of a high-value payment system based on DLT in the interbank market, we set up a payment system to run experiments in a lab environment. So while our project is still in infancy, there is still no better way to understand the technology's strengths and shortcomings than to work with it in a controlled setting. So for more information on Jasper, you can check out the paper that will be posted on our website later today, and I really urge you to attend this session later today. So let me wrap up here. Modernizing system with technological advances and other changes in the payments environment are occurring at such a fast pace is not only challenging, it is potentially paralyzing. The fear of adopting systems that quickly become technologically obsolete is just natural. However, we also know that inaction is not without cost. And more importantly, the modernization process provides a truly amazing opportunity to reshape an essential part of our financial infrastructure, and that for the benefit of all Canadians. As I've explained, the Bank of Canada is closely involved in all aspects of this transformation. Making payments more efficient and secure will benefit us all. And again, let me repeat this important point in French. La Banque du Canada participe de près à la modernisation des systèmes de paiement du pays, et rendre les paiements plus efficients et plus sûrs profitera à tous les Canadiens. A sound payment system is as important for the stability of our financial system as a reliable electrical grid is for the economy. And a stable financial system is essential for the effective conduct of our inflation-targeting monetary policy. Merci beaucoup. Thank you.
As we mentioned, he has agreed to take your questions. If we see you up at the microphone, we'll come right out to you, so make your way there. I've got one quick question just at a kind of high level, and that is, as the modernization talk goes, there are non-regulated players that are in the mix. What's your thinking about how they fit in, allowing for innovation, but also keeping your mandate together?
Yeah, so, I mean, what we're concerned with is really, I guess mostly systemic risk. And so when these systems become larger, more used, I think then there's a danger that without being overseen, those risks can materialize. So for smaller systems, smaller modes of payments, I think that's less problematic. And so less of a need for our own oversight.
Question out here?
Thank you. I think the moderator may have taken part of my question, but I was really wondering whether the Bank of Canada envisioned, with the new modernized system, allowing more direct access. As you know, we have a very strong delineation between indirect and direct clearers in the current system.
Yeah, this is something we'd like. This is something we're currently revisiting, to be honest. So we don't have a set view. I think our view is that we'd like to have a broader access that is risk-based. And that's really important to provide efficiencies, greater innovations. But we haven't quite settled on this, on what form it will take. So this is the broad vision, and we're still working out the details at this point.
Thank you.
Microphone one, yeah.
Hi. In other jurisdictions, we know that they're going or opting to go for 24/7, 365 settlement. What is Banks of Canada position on that?
Yeah, this is something we'd like to have also, something that's operated 24/7, fast payments, so that these payments are becoming much more efficient and cost saving. So I think that would be part of the ultimate vision.
Would it be your expectation that there would always be a hybrid system
Yeah, I think so. I think for high value payment system, I think like the most likely outcome. I mean, we don't want to dictate. As I said, we're open-minded. As long as the systems are consistent with our vision. But the particular types, we, as I said, open-minded. But I think a hybrid system is the most likely outcome.
Yes?
Yes, in terms of what's happening recently in terms of blockchain and Bitcoin and DLT as a whole, is that certainly one of the things governments have attempted to do, and of course it changes by country, Switzerland versus the Bahamas, whatever, is that governments can see where money is coming from and going to. And I'm just wondering from what your perspective is, do you see that these new virtual digital currencies, be they commodities or actual currencies, will ever be government regulated?
I think there's always a need for, at this point, for a country's currencies because of problems with lenders of last resort. And I think there's no better means than having a central bank as a lender of last resort. So, I mean, how these technologies will evolve over time, we'll see. For sure, I think what's coming out of this particular work is that DLT, we still have more hurdles to pass to be able to implement it in a high-value payment system. But I think what it also shows is that there are some tensions between having a transparent, decentralized technology like DLT would provide, and maybe the need for more privacy in high-value payment system. And so, we're learning about that as we go along with this project.
Thank you.
Is it your expectation that stability will increase as the real-time nature increases?
Well, yeah, I think I'll strengthen in terms of maybe minimizing operational risk. I think the system we have at the moment is still, provides finality and is irrevocable. And we have, the only thing is that we provide the guarantee, a residual guarantee to make sure that there's, that the finality of payment is achieved. I think this could be achieved now through a different system, an RTGS system for sure, with liquidity saving mechanism would achieve something similar. That's the experience that we get from many other jurisdictions.
Yes?
I like your wish list of a 24/7 defaulter pay fully collateralized and 24/7. I'm just wondering how you reconcile all three of those and not introduce too much payment risk, given that we expect as modernization takes hold, greater values will be flowing through both systems. I'm just wondering what your thought is on reconciling those three.
No, I think that we'll have, we have strict, again, risk-based standards that will be implemented to make sure that, the risk is consistent with what we're ready to bear. And so I don't see really an inconsistency really between the two. And for sure, for the high-value payment system, the fact that we'll have, defaulter pays system and cover all system, I think that's going to remove all this potential for credit risk. So we're not too worried about that.
Yes?
Hi, just wondering if the bank will consider a public-facing digital currency.
Well, digital currencies are, again, I don't think they're not in our near future. You could sort of see some benefit from having digital currencies where we're facing constraints from the zero lower bound when we implement monetary policy because, the interest-bearing assets are cohabiting with money. And so having a digital currencies would remove, in theory, the constraints from the zero lower bound and would make it easier to implement monetary policy in an environment where interest rates are very low. But I don't think this is in our near future. And the other thing to take into account, I think, is that Canadians are attached to their currency and they're still transacting a fair amount with cash. And, we're cognizant of that.
We've talked about the fact that some countries are ahead in modernizing parts of their system. Are there any that you look to as a model for Canada?
Well, I think it's more as a whole. I think that the experience as a whole is revealing. What have they been using? So most of them, for instance, have, again, introduced RTGS systems with liquidity savings mechanism, the vast majority. They've introduced real-time retail payments. So I think you can learn a lot from that experience as a whole. And so, we're coming a little bit at the tail end, but the benefit of that is that we have the experience from others to study.
Yes?
You started your talk about with a story about the glitch in 1985, and I think you've addressed the issue of legacy systems contributing to operational risk and perhaps worse things. I just wanted to link that with another question that was raised at the panel that Justin was facilitating, which was the cost, reducing costs while investing in innovation. And I mean, I kind of see legacy systems kind of being part of the answer there in terms of decommissioning them as quickly as one can. But in the meantime, I'm just wondering how you factor in the preponderance of legacy systems in financial services in your assessment of systemic risk.
No, this is clearly important. And we're mostly concerned with the high-value payment system because that is more prone to systemic risk, and we're also oversee, as I mentioned, the core retail payment system. But knowing that, we have, again, very strict risk standards. And so we have our staff involved with financial institutions setting the standards for these kinds of risk. And so we try to control them. So we're aware that that we have legacy infrastructure, but these are also being upgraded to keep up. And so as I said, I don't want to be alarmist here. The systems are still functioning, but it could be improved. And I think that's what we have to look forward. We have to look to the future to do this. Because at one point, it's going to be very costly to operate those systems. And the COBOL example is a good one because, it's difficult to find people that can work with it. So I think at one point it just becomes unworkable. And so we have to be looking forward instead of looking in the rearview mirror.
All right, we've got to leave it there. Please join me in thanking Sylvain Leduc.
Thank you.
And it is...